Have you seen the latest news by SIA? They're calling for money. Now, if you haven't, let me pull up this article to read with you that is from Sovereign Wealth Fund. Singapore Airlines to tap Temasek again, proceeds with convertible bond issue. Now, the keyword is again. And quite simply, because last year they first issued a mandatory convertible bond. It was not popular. The chairman let it lapse. The CEO did not take it up also. So this word again really means that Temasek is kind of expected to pick up everything that the market may not want to purchase. So the next question is, why is SIA requiring money again? And this amount is actually $6.2 billion. They've actually got a mandate to raise it from the previous EGM they've done last year. So if we look in terms of the cash burn rate, because that actually explains why they need money, correct? Currently, SIA has mentioned that they're burning about $100 to $150 million a month. $100 to $150 million, so that's a very big amount, correct? But actually last year, they actually lost about $350 million a month. And with that, they've been laying off people, they've been doing a lot of cost reduction. So this burn rate has reduced, but nonetheless, it's still a very sizable amount. Today, this tutorial, you're going to hear a few things. You're going to hear how much cash does SIA currently have? Are they in trouble? Secondly, I'll touch on is details of this mandatory convertible bond. And last but not least, I'll give you updates on SIA's operations. So if this topic interests you, continue watching on. Hi guys, welcome back. Now the first thing to address is, why does SIA actually need this money for? And if you're curious, let me pull up this use of proceeds summary table for you to understand things. What do you realize? 2 billion is needed for operating cash flow, correct? Day-to-day expenses. Then 2.7 billion is needed for capital expenditure. And what exactly is that? If you look to the right hand side, you realize it's to fund aircraft and aircraft related payments. So SIA actually buys new aeroplanes, the latest model. So that's all in all to give you a good experience when you fly with SIA. That's why they have a lot of heavy capital expenditure related to this business. So next question is, how much cash do they have behind and why do they need to raise it right now? So this is a good learning point, so stay on with me. You realize that in this summary table, the total cash balance they have as of March 2021 is $7.78 billion. That is a lot, correct? But if you factor in some burn rate, 100 to 150 million like what we've learned, possibly it's left with $7.6 billion. If we add the 6.2 billion to it, total, it's 13.8 billion. So much in cash. Really planning for the rainy day. If we factor out, they spend 100 to 150 million a day, that could last till 9 years left. 9 years. I think that's very prudent. That lasts to 2030, where the MCB actually, converts. So they are very prudent. So again, a good lesson is, if you raise money when you don't need, it's much easier. Market does not have so much adverse reaction. So a good learning point in prudency, but also they are really preparing for the worst in what it seems. Again, smash the like button. Don't wait for 9 months to press on it. Smash the like button so that we can reach a bigger audience together. Because this is a good tutorial that hopefully I can let you understand me better on this Singapore share that a lot of people are paying attention to. So what do we also realize is, they're planning so much money, but there's certainly going to be some outflows, correct? And let me reiterate some of the outflows. First, they've delayed Airbus deliveries. This is as of July 2020. 1 billion of it, they delayed it. They also delayed some deliveries as of February 2021. That's by Boeing. 4 billion delayed. But again, delayed means they are still committed legally, so they still have to purchase. They're preparing the money for that event. And also, I have a summary table for you to understand how things have surfaced along the year. So recap again, in May 2020, they actually raised $8.8 billion during crisis situation. Through rights, shares, through MCB, selling out of it to raise $8.8 billion. In July, they've conserved cash. They delayed, they deferred, this Airbus commitment. And in August 2020, they have actually announced that they have used up $4.4 billion so far already through all the bleeding, but that is possibly the worst. Something of which I'll touch on a bit further down in this tutorial. In December, they raised more money through bonds also, $850 million, and in February 2021, they delayed again Boeing's $4 billion committed purchases. And as of right now in May, they're raising $6.2 billion. So this is a timeline as to how money is actually brought into the business, used, conserved, the strategies that SIA has committed to. But what you do see, 5 billion of deferred payment that will eventually still need monies to be used for. Not only that, they also have bonds in the market that they need to repay, correct? So one of which is actually a retail bond that you can actually buy. So this is actually the SIA 3.03% retail bond. This will mature in March 2024. Total size, $750 million. Now I have some insights on this bond itself. I have a personal opinion, so I'll leave that in a private community. If you're keen, join there. It's something I share a little bit more. And also I'll give some insights in that private tutorial on trading of SIA. So if you're keen, if you're a serious investor, join the private community. I'll give more information over there. Now in this section, I'll talk about the MCB. And if you haven't bought SIA shares already, then don't worry, this MCB part doesn't really affect you. But if you're an existing shareholder, listen up, because this is some parts that you should really understand. Details of MCB is per 100 share, you get 209 MCB rights to buy this mandatory convertible bond. This ratio is a bit different. The first time around was 295. I want to do a quick check on that. But again, this is just the number that you need to take note, which means if you own 1,000 shares of SIA, you'll be given 2,090 MCB rights. If you want to exercise these rights, you should pay $2,090 to buy this MCB, mandatory convertible bond. Next, I'll show you the timeline of things. The shares will trade X rights as of 27 May. I don't know when you're viewing this video, but this is directly after Vesak Day. And then the trading of the rights will commence on 2nd of June, which technically is a time you can sell it if you want. But again, take note of brokerage costs and minimums. I don't think there'll be a big market for it, but still, from 2nd to 10th, there is a trading period that can sell the rights. If not, it will just lapse. And then, if you are keen, to purchase this MCB, you can actually purchase it by using cash. You pay out that $2,090 per 1,000 share, and this must be done by 16 June. If you are a shareholder, take note of these various timelines. With that, let's move on to the next section, which I'll highlight to you operations of SIA moving forward. Now in this section, let's talk about SIA's operational performance. And before we get there, let me show you this chart. In its share price, it's outperforming STI by quite a bit. And let me show you this. Even though STI has a lot of banks that were not badly affected, that have recovered and are doing well also, SIA is actually shown a much better share price performance. If we look back in terms of March, the outperformance is even bigger. But moving forward, that's the million-dollar question. Will SIA share price continue to do well, especially if you're an investor? So I have some numbers for you. Let me pull up this group net loss to let you understand what is kind of going on. There are a few key parts to why losses were so big. Losses were $4.27 billion for the whole year. Now, what do you realize? Operating performance was bad, correct? They lost $2.5 billion there. But what I've boxed up in red that you should pay notice of is impairment losses. Impairment to aircraft, impairment to other assets, which could also round up some of their subsidiaries and associates or some other investments. So this whole impairment portion is actually close to $2 billion. My question moving forward is, if airline industry will recover at some stage, maybe this impairment has seen its worst. Moving forward, there's no need to impair too much of assets. It's just poor operations only. So if it is true, that is possibly good news. So let's look in terms of quarter to quarter, what is the trend looking like and whether recovery is really on the horizon. Take note also, first quarter of SIA's performance is actually 1st of April to 30th of June. It doesn't start at the beginning of the year. It's 1st of April to 31st March for the financial year. So first quarter, second quarter, third quarter, fourth quarter, understand when that time frame is. And what do you realize? Second quarter was the worst, correct? And again, that is 1st July to 30th September 2020. That was kind of the time where we moved out of circuit breaker and into phase 2, but we still limited travel by almost everything. So that resulted in the bad performance operationally, but that could very well be the worst. And that is also reflected in revenue. You realize that the worst was in July to September. And moving forward, there is actually some activity already. There is some recovery already, just that it's very, very slow. And right now with this new wave of reinfection, maybe we'll be holding back again on travel. So this growth, while there is still very, very low. So do take note of it. It's not super optimistic also. So it's taken our team hours to present these slides for you. So if you benefited, smash the like button so that more people can see valuable content like this. And again, if I need to press on subscribe, we'll be touching on more businesses and shares in Singapore that could really help you in your financial journey. So I'd like to share with you some food for thought also at this point. I've actually curated this article for you to see. Read with me. This is actually by Victorian Chief Health Officer Brad Sutton. He advises Australia to actually abandon the fortress of protecting infection from external forces and open up once enough citizens have been vaccinated. It's a very forward thinking, because what we realize is this virus mutates, correct? I don't put false information there, but if you check around, this is factual. The virus mutates, it's all over the world with different strains, and then we can't really keep holding it away from external forces. Vaccinate and then open up. That is something that he suggested, a good food for thought. If more countries adopt this mindset, you could really see travel opening up faster, even though we can't rein in fully with zero infections. In fact, if I pull up a South China Morning Post, they do mention that countries like Hong Kong, Singapore, Australia, they have very low COVID-19 infections, close to zero, are trapped by their own success. Right now we are all so angry that this new strain has circulated quite a bit. We're all quite worried. But also economists are thinking, are we chasing zero infections too much that we become trapped by our own success, where other countries, once they're vaccinated, they really open up. So this is food for thought. Depending on how governments around the world react, airline industry could see a deciding turn in terms of their fate. And that's why I want to hear your thoughts also. Leave your thoughts and comments in the sections below. I'll be keen to hear whether you believe airline industry will really recover end of this year or not. Something which I kind of predicted will come true because the timeline is getting a bit tight. Will we recover in travel? Will we recreate a new travel bubble, or really open up once we have enough vaccinations? And with that, I've ended my presentation. I would like to invite you to a previous tutorial I've done. There's actually on a company, very surprising. You think that it's essential service, you think that it's defensive. This company actually is listed in Singapore. So without giving it away too much, let me invite you to this tutorial. It's a healthcare stock that actually relies on tourism and really benefits from the recovery from COVID. So if you haven't seen that tutorial, inviting you there. It's a healthcare stock that you might be familiar with. With that, I'll sign off. Take care and goodbye.